there we go. Okay, so Gran Colombia Gold. We're the leading gold producer in Colombia. We've been around since 2010, and since we were founded by our chairman, Serafino Iacono, as partners, we've produced over 1 million ounces of gold in Colombia. 2018 was an excellent year for us. We surpassed the 200,000 ounce mark for the first year, setting a new annual record of 218,000 ounces of gold production. We completed a gold notes financing that I'll walk you through a little bit more shortly that allowed us to simplify our capital structure, removing the previous convertible debt that had a lot of people uneasy about the potential for dramatic dilution of the common shares. We followed up with a listing of our common shares on the OTCQX in October, and we're starting to get some volumes coming through the US side of our listing. We strengthened our balance sheet. Our debt's down more than 50% in the last 3 years, and we now have $33 million of cash accumulated on the balance sheet at the end of December. So we're well capitalized for moving forward with our focus on our future growth opportunity, which is really emphasized by our blue sky potential at our Segovia operations. We also have a few other projects, Marmato, Zancudo, and we own an equity interest in Sand Spring Resources and their Toro Peru project in Guyana. But today we'll focus a lot of it on our Segovia operations. This is 90% roughly of our production, characterized by high-grade veins. And we have an underground expansion opportunity at Marmato that we're currently exploring to potentially set us up with another 100,000 plus ounce mine in the future. I mentioned we'd simplified our capital structure. So we currently have 48 million shares outstanding. We have another 12 million warrants at 221 Canadian listed on the exchange, and almost 3 million options outstanding, a total fully diluted of 63 million. When you look at our share price performance over the last 3 years, you'll see that it's really started to pick up in the last year. In 2016, we implemented an optimized mine plan at Segovia to really tap into the high-grade nature of these historic veins. And through the last couple of years, with increasingly improved operating and financial results, we're starting to find that in the last year, investors are getting on board with the story, and we hit new 52-week and 3-year highs on both share price and market cap last week. Now, I mentioned we'd strengthen the balance sheet. So the gold-linked notes that we issued last year, we've had a lot of investors coming to see us already at the show just to ask about those in particular. They are listed on the TSX under the symbol GCM.NT.U. They're a US-denominated bond, if you will. It's paid back in cash, but it's benchmarked with the gold price. So if you're looking for exposure to the gold price, and certainly we've seen gold starting to move up again, you'll get repaid on a quarterly basis with a cash payment tied to the price of gold, with a floor price at $12.50. That means your principal gets repaid each quarter, and anything that we generate selling the gold we're putting aside in the trust each quarter, which right now is about 3,900 ounces, you'll get a kicker on the bonus. So at the end of January, we're paying back holders with a small kicker because gold was $12.94 when we sold it last week. You also are getting an 8.25% cash coupon that's paid on a monthly basis. So even if there's no upside over $12.50, you're getting a pretty solid return on the market. They're fully secured. They have a B rating from Fitch, and we're using less than 10% of our production to be able to service these notes over time. As I mentioned, we also improved our working capital. We've now got 33 million of cash on the balance sheet, and for the first time, our working capital has now turned positive. We'd run a deficit historically. I'm going to spend much of my time talking about Segovia. Segovia is a set of mines that have been around since the 1850s. They're high-grade mines. Over their lifetime, up until 2010, they'd produced about 5 million ounces of gold. In 2010 through 2018, we've been drilling the property. We've now got over 2.3 million ounces of resource, and last year qualified our first reserve of 660,000 ounces within that resource, a very high-grade material, averaging 11 grams per ton. But we were pleased to see last year when Mining Intelligence released a white paper indicating that from their research, Segovia turns out to be one of the top 5 highest grade underground gold mines in 2017 based on its 17.5 gram mined head grade. In 2018, Segovia continued with an average of 17.1 grams per ton, and when I look at the preliminary results for others for 2018, it looks like we're going to stay in the top 5. Now, our Segovia title is unique in Colombia. We have a 3,000 hectare title. It's basically private property. We own the land, the mineral rights, and the surface rights as long as we're mining. As you can see on this title map, the number of red lines, there's 27 known veins of previous mining in the title. And by the 3 yellow stars, those are the 3 locations, the 3 veins that we've been mining since we bought the project and responsible for the 193,000 ounces that Segovia produced last year. We have a mill that's currently running at 1,200 tons a day. And on the far right, the blue star you'll see is the Chicharron project, which Sandspring acquired in July of last year. It's a silver-gold play that they're currently looking to explore and eventually bring that into production to give them a source of cash flow. But our blue sky potential resides in those other 24 veins that we're not currently mining, where we've got indications and production records from the past, and that's where we're turning our attention increasingly to explore going forward. I mentioned the optimized mine plan we put in 2016, and what we've taken is these 150-year-old mines and we've been working on modernizing them. A key part of that at the front end was on the development, but not so much just even putting in proper ramps, but putting in mechanized mining equipment in the mines to move material, to do it more efficiently and more cost effectively. Oops. And with that comes a requirement to train our labor force to be able to work with mechanized equipment. And one of the things we're proud about is our focus on talent diversity as well. In this photo, which we've entered into PwC's annual PDAC Art of Mining contest, we're focusing on the fact that not only are we training our people to work underground on mechanized equipment, but this woman in particular, Jennifer Hoyos, who's 28 years old, is the first woman certified in Colombia to be able to operate heavy equipment underground in a mine. So we're very proud of her accomplishment. She's the first. There's several others that have followed, and we roughly, by the end of this year, will have 10% of our operators as women working in jobs that traditionally were male only in Colombia. Working conditions in the mines is also important. Now that we're introducing mechanized equipment with diesel and other fumes, we've put in some ventilation shafts, the first of which, this is the top with the Howden exhaust fans over top of the one that we put in Providencia last year. We've got additional ones going in at El Silencio and Sandra K this year. And as I mentioned, we have a 1,200 ton a day processing plant. It's being upgraded right now to 1,500 tons a day by Q2. Health and safety is important. We've reduced our lost time incidents and days lost by over 80% since 2016. A tremendous accomplishment creating a culture of safety. Colombia has its issues with illegal miners, and from the beginning we've tackled it by putting in contract mining cooperatives, formalizing the miners into legal contracts, mining the material in the areas in the title that they're mining and bringing it to our mill for processing, and thereby eliminating the use of mercury and cyanide in the environment. You can see that we hit 218,000 ounces, our record. That's double where we were 4 years ago. But when we look even with our rising share price, we're still not getting the valuation that peers with similar 200,000 ounce profiles are getting in this market. Costs were cut back in 2013 and 14 once gold had fallen, and we've optimized and we're pretty steady and are pretty good at controlling our cost. Our all-in right now is averaging around $900 an ounce, so we're making some good cash flow. And that's leading us to dramatic improvement in our ability to generate EBITDA. We've gone from around 10 million back in 2014 to 105 million as of the end of September in a trailing 12 months, and we should stay at $100 million for 2018 when we report our numbers at the end of March. But like production, you're seeing that our current valuation isn't giving us the same valuation as our peers. Marmato, we're currently in the process of taking our opportunity now to look at an underground expansion. That orange carrot type structure below the existing mining operations is the current focus of our drilling, as we're taking a look at the deep zone that was discovered back in 2012 to look at an opportunity to expand there. So where do we go from here? Well, we're going to continue to try and focus on taking our production to the next level, the 250,000, 300,000 ounces within the next couple of years. Priority is going to remain on Segovia. It's high grade, it's got the infrastructure, and it's cash generating. But in the meantime, we're starting to work forward on Marmato with the hopes that we can complete a PEA later this year. And our Zancodo project right now is under option to IM Gold. We're doing a drilling program as part of an earn-in process. Sandspring, as I mentioned, we're working with them towards a feasibility study on the Toro Peru project and assisting them with Chicharron. So our focus is to continue to create this shareholder value through the increasing focus on staying alert to what we can control, our cash, our costs, and our execution. And if you have any questions, look forward to seeing you at booth 710.